Hey everybody, this is Rory McDonald from MacDon and Associates coming to you with the next episode of Tuesdays with Rory. I'm really excited about this episode because one of the things that as a realtor when it comes to helping people buying and selling houses is kind of like the whole team that works together to make sure that the process is smooth, to make sure the process goes well, to handle any issues. And I have kind of like the left hand when it comes to doing these transactions with me today, Carol Nowland of K Financial. Awesome loan officer, vice president, I believe, over at K, and just a good friend. So if you can, tell everybody a little bit who you are, your background, and potentially even what got you into kind of the mortgage world.
Okay. Well, first, let me just tell you guys, this is not scripted. I love working with Rory. You're an awesome agent, and I'd love to see your career where it's gone. It's been really fun for me. I've been doing this a long time. So I've seen a lot of agents, and you kill it because you really do care about your client. So I love that.
Thank you.
But who am I? I'm a mortgage broker, and if you don't know what that means I represent a lot of different banks, and I've been doing this, I'm not going to tell you how long, but a really long time. But I love what I do because we're really helping people get into homes or sometimes refinancing, just making sure that you've got the best solution when it comes to paying for your home.
Yeah, I love it. And you're local. You live in the area.
I do. I live in Rochester, 3 kids, like a husband, great husband, and doing this, I think, almost as long as you've been around, Rory. I've been doing this. So I got a lot of experience.
So lots of experience, a solid background.
Yeah.
It's funny, like, isn't it weird, like, in a lot of ways? I know this has nothing to do with what we're talking about, but like how God has a tendency to take relationships with people. We were talking about this when we first got together, right? Yeah. Like, God has a tendency to take relationships that people have formed in the past and go, no, let me redirect this. Now it's going to be based on this. Because I met you way back in the day. For some of you guys who might be watching, who might be part of this background, you are a host family for me. Yep. When I was a camp counselor at Spring Hill, and we put a camp on over at the Troy campus of Kensington. I stayed with you with 4 other guys. How you eventually reached out to me and said, you're the person I want to work with as a realtor, I don't understand, but God is good.
Yeah.
I think we were playing football in your living room. Like,
yeah. I mean, and you still have that same fun energy. I remember I told you this, like you running around leading these kids, but you still have that same great fun energy, and you really do care about people. So that's why I like working with you.
Yeah. Same to you. I think it's a lot of fun. It's been a really fun couple years. So just to jump right into this, you mentioned this kind of in your introduction. You represent a multitude of banks because you are a broker.
Yes.
I think there's, I don't want to say a misconception, but a misunderstanding for a lot of people, both the consumer out there, the realtor out there, you can go down the road with anybody. What is the difference? What makes you, Carol Nowland of K Financial, what makes you a little bit different in comparison to some of these other opportunities that people have as far as loans go?
Yeah, so that's a great question because I get it all the time. And it's surprising that more people don't know about what a mortgage broker does, say, compared to a bank. Mm-hmm. So a bank, you walk in, you meet with somebody who hopefully has some experience, and they have a couple products to offer, and you're kind of locked into what they offer. As a mortgage broker, we represent many banks, many lenders who have niche products, or maybe it's just a plain vanilla 30-year fixed rate mortgage that you want to get, but are you getting the best rate? Do you have the best cost? Do you have the lowest private mortgage insurance? So we're shopping basically for the client. We're helping them in the beginning to get pre-approved and understand how much is this house going to cost me? What's my monthly payment going to be? How much do I need out of my pocket? I love working with you because Rory and I start that together. We'll talk, the client will come to me and say, hey, this is the house payment I'd like, and this is how much money I have. And then we look at their credit and we help get them set up. And I love that. We've seen people, it's just been fun to see people get in a house that at first we weren't sure if it was going to happen, but we got them on track. So, but my goal is get them started, understand what this means to buy a house. And then once they actually find the house, then the relationships that I have, we look to see what lender is going to offer the best solution for that client. That is the difference between maybe a broker and, say, a brick and mortar bank. Yeah. We've got a lot of options.
Right. So just to the old school way, I got to touch into this. One of the old school things that I hear people say a lot is hey, if you're looking for a mortgage, let's call Fifth Third, let's call Huntington, let's call Chase, let's call Rocket, let's call, like, go down the list. They have these different conversations with 50 different lenders. Numbers are thrown with periods in different places at different spots with percentages everywhere. And it just becomes very overwhelming. I experienced this with my first time purchasing a home. And what I've seen you do as a broker is being able to take all that information and go, hey, I've done the sorting. Here's your best couple options. These are the best opportunities for you to go with. Or, hey, I looked at all of them. This is the best option. Don't even bother looking at the rest. I found a great plan over at UWM or whatever it might be, being able to take that off of people, because it's a stressful process.
You know what? It can be stressful, because just like if you're buying a car, right?
Yeah.
Did I get the best deal? I don't know. It can be stressful. But, and you said something that is right, but I want to add on to it. I'll never say don't look at that. But what I'll show them is, here are your solutions, and this is why this one meets your needs. So I don't know if I answered that. I don't know if what that was
I think
question,
that's great. Yeah.
But when you go to buy a house or get a mortgage, you're going to have, maybe your family, your parents, your neighbor, your boss, your coworker, friends. Everybody has advice.
Oh yeah.
Hey, you should do this. You should do that. There's no should, because everybody has their own situation, right? Some people in the old days, there was something, well, they still have them, but called adjustable rate mortgages. That was a great solution for a lot of people, and it wasn't a good solution for others, but they needed to know what that solution was. Should you pay points? There's a lot in there. But my goal, Rory, and I think you can attest to this, is I want the client to have a great experience.
Yeah.
I want them to feel comfortable that they got the best solution for them, but also that it wasn't hard. It was easy. It was fast. They might even forget who I am because it was so easy.
Yeah. I every client of mine that's gone through you has not forgotten who you are.
That's nice to hear.
So yeah, some encouragement for you. No, I think that really revolves around the idea. And I say this to clients all the time, like this experience of you purchasing a home is not about me, right? Like I hate to say this, and this might even be controversial. People might be mad at this. Reality is when you hold the big key up at your closing, it doesn't say, my first home. It doesn't say anything like that. It's got the name of the realtor on it. It's got the name of the title company on it. It's got the name of the mortgage company on it. This is not about them.
Right.
This is about you, which is why, like, I don't post that kind of stuff. Like, this is not about me.
Right.
This is 100% about you. And it's really cool seeing you do that through the entire mortgage process, which is really good. I wanted to get into another topic.
Wait, I want to say something about that.
Yeah.
So in this whole world, which is actually kind of newer for me, being in this business for so long, everything is marketing. Everything is social media. Because I'm doing it. I wake up and I look at my phone right away. So you see somebody that looks good, like, oh my gosh, they sold houses. They're doing great. Yeah. They must be good at what they do. And it's hard for somebody like you and even me, like, to brag. We're not the kind that's like, look what I did. But sometimes we need to do that. And it's a little challenging, but I appreciate what you're saying. It's not about us. And maybe that's why we're not seeing that all the time from you or from me, but it's something maybe people have to consider when they're choosing who they're going to work with. It's not that they have a beautiful website or they have a beautiful online presence. It's, are they referred? Do they have a good reputation?
For sure. Yeah, 100%. I think that's the most important thing.
Not that we don't need to work on the social media, but I'm just, warning.
Yeah. It's important, but it's not the only thing, right? Like, the client is far more important than what I post or what you post or what this video says or anything like that.
Right.
Speaking of which, social media.
Okay.
Nobody has been more involved, more tech savvy than my generation specifically, the millennial generation, which right now is, a vast majority of home buyers right now. And they make up almost 100% of the first-time home buyers. Right. Knowing that, kind of understanding that, and from your point of view with the mortgages, what is it that you're seeing in the market with changes of interest rates? Home pricing still continuing to go up, even though people are saying that the market's going to crash. It's continuing to go up. Crazy, like different options with mortgages. Like, what is it that you're seeing right now in the market, and then what is it that you guys are doing to kind of combat that? You
use that word millennial, which, is interesting, but the people that are aged, I think it's 24 to 36 right now. Those people,
Yeah.
You people are making up the
You people
are making up.
I'm one of them too.
Making up the largest amount of home buyers right now.
Yeah.
So and there are a lot of facts about it. You guys are the most educated generation, and a lot of people buying side note about the education.
Yeah.
Just fun fact: 33% of millennials have student loan debt.
Yeah.
So it's not everybody doesn't have student loan debt, and these payments are not overwhelming. And people think that it prevents them from buying a house. So just FYI on that.
Yeah.
But what am I saying? So we know most people that are buying houses right now, a large majority are first-time home buyers, maybe millennials, and as educated as this generation is, some financial education is missing, and people are making great money. A lot of people, but they don't have the money to buy a house. They don't have the down payment.
Yeah. Yeah.
So the monthly payment may not be a big deal, but it's getting the money to buy the house, and usually the monthly payment's less than rent.
Sure.
Or similar.
Yeah.
So that's what we're seeing. So there are programs to combat that. Maybe have you heard of the down payment assistance?
Yeah, we've done a couple of them. There's a lot of different options out there.
Yeah.
Let's go a little bit deeper into that if
Okay.
you want to. Yeah.
So for anybody,
Yeah.
anybody can get a program right now, assuming you have good credit and you qualify, can put only 3% down as a down payment. Now there are other costs, and we can talk about that in a minute, but 3% down payment.
Okay.
Used
So
to be
to add on to this really quick, because I know you're going to go in depth with it. When I purchased my first home, when Holly and I purchased, I think it was 2016, maybe 2017. When we first purchased our home, it was a little house in Mount Clemens, right? It was our first house, and so we put 3% down then too.
Yep.
Is that different than what it is that's happening now with putting 3% down?
Yes and no.
Okay.
Yes, still 3%.
Okay.
Still the same thing. But the beauty is that now, when you put 3% down on a mortgage, your interest rate's typically higher, and your private mortgage insurance, which is something that you have to pay if you don't have 20% down, is typically higher.
Okay.
Another unique thing, some of the lenders that I work with, only a few, that's not common, are not charging any extra fees for only putting 3% down, let's say, compared to 5%. So your interest rate's still going to be low at 3%, just like it would be at 5%, and your private mortgage insurance is going to be lower. So it's the same thing, only 3%, but it's less money. It is a lower payment. There are some new programs, though, where if you put 3% down, if you earn, say, most of our business right now is Macomb, Oakland, Wayne, St. Clair, those counties. If you live in those counties right now, you could get some assistance if you earn less than, I think it's $74,000 right now.
Okay.
So let's say you earn less than $74,000. If you would be willing to take a phone call for 1 hour and talk to a counselor who's going to give you good information about buying the house. It's I know it's hard for any of us to focus for an hour, but it's great home buying information. If you're willing to do that and you earn $74,000 or less, they're going to give you $1,250 toward your house purchase.
Okay.
If you earn $50,000 or less, you're going to get $2,500 toward your house purchase. So the market's doing everything they can to get people into homes, because we know that saving hasn't been a pattern for and I hate to say for everybody, because obviously everyone's different, but in general, the down payment is the biggest hurdle to home buying right now. Yeah.
Well, I mean, I know some people are probably watching this and going, what am I going to do with $1,200 or $2,500? That's not enough. Reality is it's your whole first year of taxes.
Yeah.
The entire first year of taxes are now covered. Now you don't have to think about it, right? Like things like that are taken care of. So just to put things into perspective with that.
I agree. But I am surprised the calls that I get that people don't have money saved yet.
Yeah.
86% of people, this just came out, 86% of people who are first-time home buyers who say they want to buy in the next year don't have savings yet.
Yeah.
Which you and I, right. But you and I, this is so great that we've had people like that, and we just, all right, let's get them on track.
Yep.
And then they're so excited. We want to do things now. Well, you can start right now. Let's start saving right now, and we'll track it. And the other great thing I love about working with you and great real estate agents is we can get, the sellers right now are so willing to help. So let's say we do have that buyer that's a little shy on money or something like that. It's been great that we've been able to get the sellers to come on board, come alongside and structure a deal that works for the seller and the buyer so
Correct.
that they can come in with less money.
Yep. And one of the ways that we've been doing that, just to kind of add on to that, is through the form of seller concessions. So a seller concession, just so that everybody knows, is the seller's way of saying, like, let's just pretend you're buying $100,000 house, nice round number. And the purchaser is saying, hey, I don't want to mess with the 7.5% mortgage rate. I don't want to do that, or interest rate. I want it to be lower. There's actually a program out there, which we're going to get into in a minute. There's a 2-to-1 buy down where a seller can contribute funds towards the buyer's closing costs that can go to this buy down for them to have a lower interest rate for the first couple of years, which is huge. It's a really big thing. It can also just go to the closing costs though too. It doesn't necessarily have to buy down the rate if it's if you're comfortable with the amount that you're paying as far as your payment.
Yeah, you asked what's hot in the market. That, besides these down payment, whether you're a first-time home buyer or anybody buying a house right now, what's hot is this program. They call it a 2-1 or a 3-2-1. What do these words mean? But basically, the seller or the agent or me, we can all be part of it. We help contribute to the first couple of years' mortgage payments. We literally are making it so that somebody has a lower mortgage payment year 1, year 2, year 3, depending on what they choose. And the beauty of it, let's just pick a rate. Let's say it's 7%. And by the way, rates today are a little lower, but it depends on the day. Rates change every day throughout the day. So if you are ever shopping for rates, you want to look at everything at the same time.
Yeah.
Yeah, and you want to have a house in mind. But let's say it's 7%. So your payment at 7% is obviously going to be a higher mortgage payment than it would be at, say, 6%, 5%,
Sure.
something lower, right? So the way that this works is if the payment, say, starts at 7, the seller is going to put enough money aside to help you so that year 1, you're only paying the payment as if it was 2 points less. So 7 minus 2, 5. So you'd be paying your mortgage payment as if you're at a 5% interest rate. That's for a whole year.
Yep.
Year 2, can you guess what the rate would be year 2?
6.
6,
Yeah.
right? So now year 2, for a whole year, you're paying your payment as if your rate's at 6%. Year 3, it would go to 7%, and you'd have that for the rest of your loan.
Right.
Now, what's cool about that is, well, hopefully you're going to be paying a lower payment for a couple of years, and hopefully we're going to be refinancing you.
Yeah.
And refinancing simply means we're just going to do the loan again.
Yeah.
And a great mortgage company broker is going to do that for you at no or low cost. We're going to do that again for you when the rate goes down. When is the rate going to go down? Do you know?
No, I don't think anybody who's watching this that knows when the rate's going to go down, call in, please. Like, reach out to me. I want to have you on here because everybody has an idea of what's going to happen. Rates are going to go up to 10. Rates are going to drop back down to 4.5. I mean, I think you said this earlier. The Fed doesn't even know.
The Fed doesn't even know. Nobody knows when rates are going to change. We hope they're going to be better in the next 2-3 years.
Yeah.
That's what we think, but we don't know.
Mm-hmm.
So this program is wonderful because if that does happen, you've been paying this low interest rate for 2 years. By the time the 3rd year hits, you're refinancing, so you never have to pay that higher payment. What if rates get better in 9 months from now? This is awesome. If they get better in 9 months from now and you're on that buy down solution, you get that cash back. You get that money to use to pay down your mortgage.
Okay.
So you've got money, thousands, sitting in this account that's being used to offset your payment.
Yeah.
When you refinance, that money comes right back and pays down your mortgage. So if rates get better in the next few years, this has been wonderful. And if they don't, it's okay. You still saved quite a bit of money the first few years.
Sure. So I don't know if you ever run into this too, and this kind of has to do with this is I'm noticing a lot of people, especially around the holiday season. This is a time when I see people going, hey, I'm going to wait till January 1st. Hey, I'm going to wait till the spring. Hey, I'm going to wait till early summer. I don't want to start this process yet. And specifically speaking to the millennials that might be listening right now going, hey, who might be thinking, oh my gosh, she's describing me. I don't have the funds in my bank account right now to go buy a house and put, $15,000 down on a home between closing costs and down payment and all that stuff. The kind of the constant thing that I hear from people is them saying, oh, I'll reach out to a lender then. Oh, I'll get pre-approved when the time comes that I am ready to purchase a home.
Right.
What would you say to that person who it is like, I want to buy. I know I'm going to buy. It's just a matter of when, but I don't need to have a conversation yet. Like, what would you say to that person?
Oh my gosh. Well, first I could a lot. I can go, but let's get started now. Some people don't want to get started now, honestly, because they might contact the wrong person who's going to keep calling them every day till they,
Sure.
you start getting marketing and texts and, oh my gosh, I just was inquiring. I'm just thinking about it. So no matter what we want to buy, right? You put it out there and now I'm not ready, but I would want them to call us now. And here's the reason. First of all, if it's us, we're not going to bombard them. We'll respect their time and their space, but we can find out when the right time would be, exactly how much money do you need, what's that payment going to look like, so they're prepared. Mm-hmm. And it's happened with us where people say, I'm not ready, but let's just sit down, and they end up buying right away. And it's happened where it's been almost a year, 2 years. Like, I remember this one client, 3 years, they finally got their house. That was a celebration. But, let's get you started, because you don't know what you don't know.
Yeah.
Maybe your reason for not buying right now is you don't have enough money, and some program comes along that we find out about. Guess what? You could buy right now.
Yeah. Yeah.
Maybe it's the rate. Maybe the rate this just happened to us. Rates dropped significantly about a week ago. Significantly. Mm-hmm. They'd gone up quick and they came back. So maybe that person's going to be ready now where they didn't think that they would be. So there's a lot of reasons. So give us a call so you know what's involved and how much money you really need and what the payment's really going to look like.
Okay. And somebody reaching out to you, what should they expect having that first initial conversation with you?
Okay. I don't know if I said this before, but to me, that word client experience, I want them to be so happy and so comfortable, because everybody I talk to, just like you, I really do care about them, and they are like my family, and I want them to feel like, okay, I'm glad I called.
Yeah.
I understood. I'm not scared anymore, that kind of thing. But what should they expect is, I'm just going to ask them, what's your goal? How much do you have to put toward this? Do you have anything? What would you like your payment to look like? Is this going to be a long-term house? Do you already own a house? So I'm just going to ask questions. I'm going to listen.
Yeah.
And then I'll be able to sift through what they've told me and provide them with solutions.
Yeah.
So they should just expect someone who's going to listen and understand where they're at.
Okay. So just to be clear, and I'm teeing you up for this.
Okay.
Is anybody going to have credit pulled in that initial conversation?
Well, you should never have your credit pulled unless you authorize that, number one.
Write that down. You never have your credit pulled unless you are authorizing that. There's a lot of lenders out there that I know that will just pull credit.
Well, while you're on the never pay for you shouldn't be charged for a pre-approval.
Yes.
There are lenders that'll say, give us $500 because now you're locked in.
Yeah.
Now I probably should use that person. So this is something we just offer, but you just talked about that credit pull. There are two types of credit pulls. One's called a hard pull and a soft credit pull. Mm-hmm. The hard credit pull is what's really needed to ultimately give you a mortgage. That will impact your credit score by only 2 points, so not significantly. But if you start calling a bunch of lenders and they're pulling your credit, now all of a sudden your credit score has gone down. Why does that matter? Because you might still get a loan, but you might not get the best rate.
Sure.
Because rates are based on your actual score. So you don't want to call a bunch of lenders and say, go ahead and run my credit, number one. A lot of people know this already, but they might not. But if you called me and you said, I'm not sure I'm ready, and frankly, I don't think my credit's that good, we're going to do what we call soft credit inquiry. Okay. So that's not going to impact your credit score, but we're going to be able to see what your real credit score is right now. Mm-hmm. So no, they shouldn't expect for me to run their credit, but often we do that because that's part of preparing. Yeah. The last thing you want to do is be looking for houses and now find out you really can't afford that payment. It's higher because you had a credit score you didn't anticipate, and now you just open the door to something else. Yeah. So credit scoring, your interest rate's based on your credit score, but what happens sometimes is there's a certain credit score, say 720. People who have above a 720 have a better interest rate than somebody who is at 719. 1 point. So we're going to look at that. What can we do to bump you up a little bit higher to get you a little bit better interest rate? Yeah. Which wasn't on our topic here, but something important to have someone who's going to look up for the whole situation. 100%,
which is, again, why in so many ways working with a broker is a really, really awesome option, because they bring up things like that that a lot of other lenders, and specifically banks, they don't even think to bring up, because it's not something that they need to or want to
Right.
in some ways, you know.
Yeah.
It's a let's just get the loan through. Let's just get it closed.
Which is another thing. Getting a mortgage is the last thing you want to do, I would think. It's not fun. I mean, I don't like getting a new phone. I don't like buying a new car. It's just, okay, what's this all about? But
no one's on Zillow looking at interest rates.
no, it's not fun.
Yeah.
But the goal is that it should be easy, it should be fast, and it should be right. And that's why I said they may not remember us. They're going to remember you because you showed them the fun house that they're going to hopefully buy. But it shouldn't be tedious.
Sure.
As long as you're willing just to share with your lender what your real goals are, and they're looking out for you.
Love it. I love it. Thanks so much for coming in today. I'm so thankful that you're able to make it in. And for anybody out there who's considering the idea, or maybe you just want to do one of those soft inquiries with Carol, get an idea of what your goals are and what it is that you're kind of looking to do coming into the future when it comes to buying a home. Whether that's here in Michigan, you're in several other states too. Definitely reach out to her. How might they get in contact with you? What's the best way to do that?
Oh gosh, thanks for asking. Well, I can give them my phone number.
If you're comfortable with that,
right here on the podcast.
Yeah, go for it.
248, or call Rory, 248-506-8433. Or that's probably the best way for anyone to reach me. And that's another thing, just not to you can call me anytime. Yeah. I mean, we've talked on Saturday night, Sunday afternoon, because that's when people are looking for houses. Yeah. So if we can't pick up, we won't. Yep.
I love it. Again, thanks so much for coming in today. Thank you guys for tuning in for today's episode of Tuesdays with Rory. We will catch you next time. But besides that, you guys have a very, very blessed day. We'll see ya.
Thanks.